Check out the link in the description below to see an article we wrote recently about how to sell options for a living, the complete beginner's guide to the wheel strategy. Now let's get started. Today we're going to talk about the Lordstown report from Hindenburg Research. For those who don't know, Hindenburg is a short-selling firm where they put out reports regularly about companies that they see who may be misleading the public. They are most famously known for putting out a report on Nikola, NKLA. Ever since they put out the report, the company's stock just has never recovered. It went as high as $75 a share, but when the report came out, they just kept dropping, and it's currently trading at $15. So you know the power of this firm. Even though it's a small research company, but the effect they have on the market is extremely relevant. So they recently put out a report on Lordstown Motors, symbol RIDE. If you look at the symbol for the charts for Lordstown Motors, the stock took a beating. It was trading as high as 30 bucks, but since the report came out, it's been going down and down every single day. And right now it's trading at about $13. Now, why is the stock crashing? Well, let's talk about the report. This report is a very, very detailed report from the research. Now, I want to preface this by saying that I don't have any shares of RIDE. I did sold a put on it recently, and that expired worthless, and I pocketed the whole premium. But right now, I have zero position in RIDE, and I simply find this report interesting. I've seen the Nikola report a while back, and this report shared a lot of similarities with Nikola. So I want to just briefly go over some of the main points touched upon by the report on Lordstown Motors. So let's go into it. So if you open the report, it's totally public on this website, hindenburgresearch.com, Lordstown. I'll put a link in the description below. And let's go over the main things that they are putting out, the main reasons that they're putting out this short report. So the first reason is the illusions of supply and demand. What they're saying is the CEO and the main board of this company was putting out fake demands for their vehicles. So for those who don't know, Lordstown Motor make electric pickup trucks, so EV pickup trucks. So this seems to be like a trend that's going on right now. It all started with Tesla. Tesla started with consumer grade cars, sedans, SUVs, and then Nikola wanted to do a EV, huge trucks, not like the delivery trucks. And now this company, Lordstown Motor, is trying to do pickup trucks. So what they are doing is that, well, by the way, the CEO, Steve Burns of Lordstown, came from Workhorse. So Workhorse is another EV company. And, Steve Burns didn't get fired, but he was given the choice to resign after he pretty much did nothing on the company and wasted a lot of their money. So he went ahead and created this company, Lordstown Motors, via a SPAC. And as you know how popular SPACs are nowadays in 2021, he raised like a couple $100 million to start a company. Now that's how Lordstown got created. So currently they have no products, zero products, and they don't have any working products. They have like a vehicle that was in alpha phase in January 2021, and they plan to do a beta phase of the article of the electric pickup truck soon. So they are very, very early in the company, and they have zero products. But what they're saying is Steve Burns was able to sell hundreds, thousand pickup trucks plus electric pickup trucks without having a single product. So they say that they have pre-sold 100,000 electric pickup trucks. So Hindenburg is saying that this is all fake. What they found out was that a lot of companies that they sold this to as a pre-sold units were fake. Some of these companies were run by a company with like 2 people in it, and it's like a fake media press in order for them to raise more money from from investors who didn't know this. So I think this is very shady, and like for the record, I don't really trust every single thing in this report, but it seems like Hindenburg has done their research to look through the parties that they say that placed these $100,000 pickup truck orders. So they went to the detail about that. So I'll show you that later. But what they're showing here is that the CEO, Lordstown Motors, Steve Burns, was able to get people like the vice presidents, even the former president, Donald Trump, to appear right next to their prototype, like a truck here and here. And then what's weird is that in this picture, Vice President Mike Pence was in the electric pickup truck that was blew up, that went up in flames in January, which I'll show you later. So it was crazy that they were allowed to do this. So having these 2 pictures and placed it all over the website was good enough for Lordstown to convince investors to put money in their trucks. Even Donald Trump was like, he was in this picture for this photo op, and even Donald Trump was like, this is incredible concept, and praised Lordstown for creating potential new jobs. This is the part that Donald Trump was actually into, not the actual car. So what happened was that GM had a plant in the States, and they planned to close out the plant and let go all of their employers. And this is doesn't look good for Donald Trump when he was the president in Cleveland. So in Cleveland, Ohio. And what happened was that Steve Burns went in and was able to snatch up the plant from GM via a loan from GM to say, hey, you know what? Give me this plant. I want to use it to start a new company to pivot it to produce EV pickup trucks. So he took a loan from GM to start to use it on the plant to start this company and to hire people. So of course, like when Donald Trump sees this, he's gonna be like, "Hey, this is good for me. It's a good narrative. I'm gonna create new jobs. I'm gonna help create new jobs." So let me go into the photo op with this CEO to talk about, "Hey, we just created a lot of new jobs in Cleveland, Ohio." So that's the thing. Okay, so let's go into the fake order book controversy. They have said that we pre-sold 100,000 of these vehicles to various fleets across America. Really a big appetite. So the CEO went to Yahoo Finance and announced this. But Hindenburg went deep into it to see what exactly is this 100,000 order. Who actually placed 100,000 vehicles from a company that didn't have a product? So, and Steve Burns referred to them as very serious orders. So, this kind of language is pretty much a lot of PR, I think. He even went on Mad Money to talk to Kramer about these orders. So, here's what Hindenburg found out: is that these orders are non-binding letters of intent. So when you have non-binding letters of intent, that doesn't mean you are committed to buy the vehicles. You can say, I could say, I have a non-binding letter of intent to buy the White House, right? Like you could say that, it's like saying I intend to buy the White House, but I have no commitment. I don't have to buy the White House. I don't have legal commitment to buy the White House. So this is pretty much useless. So the other difference is that all of these intents require $0 as reservation payments. So you don't have to put up any money for your intent to buy things. Like at least with Tesla, you had to put up a couple $100 or a couple thousand, like $1,000 or something to buy a Tesla, to intend to buy Tesla, to pre-order. But this requires nothing. So pretty much anyone can place a intent to order these non-existent trucks. So that's pretty alarming. They do not require an actual purchase. And they are from customers that generally do not operate fleets. They are from customers that often do not have the means to make the purchases. So this is like the crazy part is that Hindenburg looked into the people who operated on the who placed these orders, and a lot of time they found out that the people who bought these orders are from people who don't have like a real company behind it. It seems to be like fake orders, if that's what it looks like. So all of this is public information. Like all of this is public information from Lordstown itself. They are non-binding letter of intent. So they started touting all of these crazy non-binding orders as part of their investor pitch book to potential investors. So that's worrisome. And so if you look into it, so here's the first company they look into, E Squared Energy. So they placed a $735 million deal for 14,000 trucks from them, from Lordstown. However, this company, E Squared Energy, is an entity that ran out a small apartment in Texas. They don't have anything behind them except for 2 employees who live in an apartment. And they were able to place a $735 million order for 14,000 trucks? And what for? They are not a truck company or something. They don't need a truck. Why would they place this much order? So that's what they found out. They dug into the LinkedIn of the company and they found that there's only 2 employees and they live in like an apartment here that costs like $1,000 a month. So that's one. And then there's another company called Innovation LLC. They placed a $52.5 million for 1,000 trucks from a 2-person startup with no apparent asset, based out of a virtual office. So this is pretty crazy that they were able to find out about that. So that's that, and they actually reach out to the CEO of these companies, and they're like, we don't get involved with actual ordering. And this is like, and they're saying like a lot of this is like just PR marketing, that they were paid to do that. Here's another 500 truck order. That's really a promoter agreement. Weird. So then it goes into the allegation that the CEO was paying $30 per non-binding order as early as 2016. So the CEO is using the money to pay people to place fake orders. That's a pretty damning evidence. And that's came from a lawsuit, All of this is public data and it's available. And then running up to its public SPAC, they began to pay $50 for each zero commitment order. So they're paying you like $50 to place a fake order, just to drive up the fake demand for the company. Now if that's not misleading, I don't know what is. So they go into detail, like a lot of these people, are fake. Go into it. Let's go. Like this is even funnier. Like they saw this picture right here. So this company supposedly placed order, like they were featured on the website on Lordstown, like as part of their pre-order customers. So this company called GridX. So they reached out to GridX via Facebook. This is the CEO, founder and CEO. They were like, hey, we just want to let you know that we see GridX on your website as key customer. We'd like to ask you more about it. So the CEO says, I don't know anything about Lordstown Motor. We'll pick up. Not sure I'm the right person to talk to. They're like, oh, thank you for getting back to me because we saw your logo on the website. And he's like, we are completely unaware of this. I heard of them from your inquiry message the first time. Do you have a website or link? They send them a site. They're like, thanks. The investigation work may not be what you originally reached out for, though. I take it pretty seriously. So he has no idea that his company was put on the Lordstown website as a potential purchaser. And that's another scummy kind of thing to do for them to just do that. So, and then they go into the detail about the CEO, according to former employees, what they thought about the CEO and what they did. Anyway, so now let's go to part 2. production overpromises and tech issues. So this is the part where they been so okay. I'll give them credit. Like sometimes, yes, you're gonna have delays because of COVID and stuff. Sure. But like what's really interesting is that in January, their truck went up in flames doing one of the alpha tests on one of the trucks. The whole thing like started with people in the truck. They were driving, and then it went up in flames. It started with a small engine flame, and then it just completely engulfed the vehicle later. So their explanation was that, oh, this was a mistake of our hand assembly in our alpha vehicle, and it won't happen again during the beta phase. So that doesn't give investor a lot of confidence about your vehicle, even though it is alpha. Like if you get a vehicle that bursts into flames 10 minutes when you start the truck, that's not very confident to the user. So okay, let's go into next part. Here's going to the company. So they were like, the company was saying, hey, we're gonna build our own thing, but this is very similar to Nikola. Like we're gonna build our own technology, blah blah blah. But they found out that they were actually outsourcing a lot of the technology to other vendor to do it, and very common. And then they were like, we're gonna make all battery pack in-house. Now this statement, like we don't know when they'll do it, so technically it's correct. It says we will make the batteries in-house. But one of the former employees like, there's no battery pack manufacturing equipment on site there now. They just put it together by hand. Again, like this is not that damning because he did say we will, so it doesn't say that they are doing it currently. So that's one. And then here's what Burns, the CEO, says: we will license the motor technology and produce the motor in-house. So they're actually buying them directly from the source. So again, they say we will, so it's not happening now. See, they got sued for stealing technology from other companies. So what's interesting is that since the SPAC, the company went public, insiders have sold $28 million worth of stock in 4 months through open market. So they are selling their insider shares to the public since their IPO. So let me look at the chart. So they were IPO'd at $10, around $10. And then all these crazy press just drove it way up to like $30. So that's like triple. As it go up, the insiders were selling their stock to the public market. So $28 million worth of stocks in just 4 months. So that's about it for the article. And they released like 21 questions for the company. And then they give like a background into the CEO, Steve Burns, that he was in the college and enrolled in college for 6.5 years, but never graduated. He had problems in his previous company, Workhorse. So yeah, there's the reports. And like, here's what I think. I think a lot of stuff are valid in the report probably, but I don't know the full, like what's really happening. But a lot of this stuff seems pretty shady to me, and it seems to be very similar to what happened with Nikola. And with RIDE right now trading at $13, I sold the cash secure put for $12.50 last week, and they expired worthless. And right now it seems to be hitting this support right here. Personally, I probably will stay away from this and watch this for a little bit. I think it will be very hard for the company to go back up to like $30 levels, unless the CEO come out and say something crazy. But at this point, I don't really trust the CEO. And look at all the news. There's a lot of lawsuits for the company right now. It's just insane number of lawsuits. So yeah, a lot of sentiment from stock tweets are not really happy with the company. And I will stay away, and I want to watch what happens. For those of you who are in this, I feel bad for you, and you should probably do your due diligence and probably cut your losses. I'm not a stock investor, advisor. This is purely my opinion. So I hope you guys enjoy this short rundown or the short report by Hindenburg Research. I will put a link in the description below, and I'll see you guys next time. Make sure to subscribe.